Hi everyone, and welcome to this week's update. It's PropDesk Weekly, and my name is Alejandro, and I've been trading since many years, 2006 to be exact. And over the next couple of slides, I'll provide you an update on what's happening on the macroeconomic front. Afterwards, we're going to look how that ties in with the charts. Before we start though, I need to stress that any type of trading is risky. So bear that in mind. I will also share my point of view on the markets, but this does not constitute an investing advice. Okay, good. So what's been happening recently? So US consumer sentiment keeps on falling. So this data was out on Friday last week. You might remember that at one point we had this slide here, and then we had another leg to the downside. So the slide here was what started, especially this one here last month, is what started the sell-off in stock markets. That is what caused indices and cryptocurrency to drop to the downside, from pushing to the upside and hitting a high here in December as Trump was about to take office. But it's keeping dropping, and this is being reflected in stock indices, stock markets, where people anticipate lower consumption. Now let's take a look at this. This is retail sales published earlier this week, and we did see a little hit. So people did consume slightly less here in January, and it did advance to the upside because last month we had a contraction, as you can see here. But as you can see here, we're still in this uptrend where people are consuming more and more, but they're consuming less than what people previously anticipated. So economists thought that on Friday that retail sales would increase with 0.6 instead of the increase by 0.2. Now, if you look at this is jobless claims. So jobless claims is a good indicator to what's happening in the economy. And 3 weeks ago, we had this big move to the upside on the back of what's happening with Trump and Elon Musk and cutting down US government workers. That is what we call austerity. That is when the government starts to spend less to effectivize, of course, save money. Hopefully they can put that money to work somewhere else. Now, what's happening here is that thankfully it was just a one-off. So this is holding up relatively well, which is obviously positive for the markets. Now, this is quite interesting. So this is the S&P 500, and this is the Fear and Greed Index. So the CNN Fear and Greed Index is an index I've been using for at least 10 years, if not more, and it's the red line here. Usually when we are at oversold levels here, extreme fear, we tend to see some bottoming processes, as you can see here. All right, and here. Now the problem, of course, is when we're starting to enter a downtrend, a major bear market, which we haven't had since, well, like last time you see here, this is January 2022, and then went all the way down here for like 10 months almost to the downside. You had numerous of these sort of sell-offs, and most of the time they did indicate it was time for a bounce. Now, I'm not gonna go out and buy stock indices at these places just like that, at least not from a trading perspective, but from a longer term perspective, it's not too bad. In fact, I was looking at things like Microsoft earlier today. Sorry, Meta. Meta is actually at its 200-day moving average, and it's usually a good level to be bullish again. So what this is telling us, we might potentially have a little pop to the upside, and we'll talk about the levels in a few minutes, but I wanted to share this with you to sort of show you that, you know, pessimism is at this bottom. The biggest problem though I've seen so far with indices is that even if we're at these levels, nobody's rushing to buy them. Let's take a look at the Atlanta Fed GDP Now forecast model as well. So we looked at this last week and we're around here. So the way this looks right now, the US economy contracted by almost 3% at one point, or at least that's what the estimates are saying. Now it's contracting a bit less than 2%. This is the forecast. That's what people anticipate is going to happen. And at the same time, the big forecasters, the commercial banks, investment banks, are also lowering their estimates. As I mentioned before, the reason for this many times is because imports. There has been a huge amount of imports in the US, and that draws, that makes your GDP smaller. Now, what can we look forward to in the next couple of days? Well, you have the Federal Reserve rate meeting in a couple of hours, 3 hours to be exact. I don't really think there's going to be any change. Nobody really anticipates any change at all. And there are a few things that let the Fed relax One thing is that inflation moved from 3% to 2.8%, which is welcomed. The other thing is that Trump is being very cautious now about the markets. He even threw a party for Elon Musk and Tesla last week, as they had like a Tesla car show at the White House. I suspect personally that, we need to. This is good, because Trump always, when it gets really difficult, like when people put in counter tariffs, like we saw Mexico did, and we saw Canada did, the US backs off. It's happened 2 times now. Long story short, I think here, because that is still in the play, because we still have all this, and because the government is still looking to sell off, realistically, the Fed is not going to do anything right now. They're probably going to be sitting on their hands for a couple of months, waiting for the data to improve or not. At the same time, I think that Trump is also going to relax a bit. I don't think he's going to be too aggressive and looking to do any crazy stuff in terms of tariffs. Instead, as you probably seen, the focus is now on brokering a truce between Russia and Ukraine, and as well the US has started to have more intensive military action in Yemen against the Houthi militia. As well, you have a revamp of the war in Gaza and Israel as well. So that's sort of where the focus is right now for the US government. Tomorrow as well, we look forward to the Bank of England rate meeting. So this time around, the market anticipates 2 people to bet for or voting for a cut. But realistically, there's not going to be a cut. Realistically, most people are going to vote to hold rates unchanged, 7 of them in fact, and 2 for a rate cut. There are a few things, a few reasons. The first reason here is that wage growth is really strong. Wages, including bonuses, increased by 6% annually, which is higher than inflation. And also service inflation, which is another measurement of inflation in England and the UK, is at 5%. So from a fundamental point of view, I would say neutral to bearish on the dollar, and in the case of England, is neutral to bullish. Monday is going to be a really big week. This is going to most likely define what's going to happen over the next couple of weeks. This could be as well the trigger that could get things going again, because you have all these PMIs, and it was actually the US flash services PMI coupled with the sentiment indicator, which I showed you earlier, that triggered the sell-off. I mean, obviously that is what is in that data is echoing what the government is doing in general, and the market in general, and the economy in general. And that was quite interesting is that that the PMI reading, services PMI, it dropped below 50. I think it was at 49.7. That one has actually been revised, so it's actually higher than 50 now. And we want to see, where's it gonna land? Because we had a discrepancy. This flash PMI triggered the sell-off, but then you have ISM services, which is the other similar indicator. It remained strong. In fact, it was much stronger than people anticipated. So we're having sort of a mixed bag of data now, and we'll see how it plays out. I personally think Trump does not want to upset things. So I personally think we're going to be fine. Which in other words could potentially lead to higher stock markets, higher crypto at one point. But technically nobody wants to get involved right now, unfortunately. So how about the markets then? How does all this play in? So on one hand, you have a problem in the US with potentially lower economic growth. The government is becoming smaller, and in Germany you have a government that is going to spend much more money. It was approved yesterday, the decision to go ahead with an infrastructure deal of 500 billion. That's obviously very supportive. A lot of German stocks and European stocks in general are up on this, in particular things that are related to the war industry. And I think here, as long as traded above 107.62, I think people are going to be buying dips to maybe push this to 110. Are we going to go to 112? I'm not really sure at this stage. But it definitely has a bullish bias to it, so either one would buy here. Alternatively, one could potentially buy at low levels, maybe 106, 105.32. That's sort of where the banks are advising their clients to get involved. In the case of Brent, as you might remember, was bearish here, and the market pushed above my trend following level. That stopped, so we would have been stopped out if we would have tried to trade that. Remember, I've been bearish for most of the time on the way down here, and as I explained last time, this is a process. It's a situation linked to slower economic growth, lower stocks in the US, then number two as well, the peace deal between Russia and Ukraine. And that is sort of, we're moving towards that level now. People are talking about at least it's the end of the war before the end of the year. So that is sort of being priced in now. And as for the data, if the US data comes in good, I would say we're probably going to stabilize and push to 74. I think that's the best and most likely scenario. If I'm wrong on the data and we have more sell-offs, then I think the easiest bet would just to be selling a break to 68. So what's the key lesson here? Key lesson is just lay low, wait for this to consolidate. I think sort of let this line up, and then when we have either a bullish or like we had here a bearish move. How about the NASDAQ? So the NASDAQ is way below its 200-day moving average. So this either has bottomed out here, and this is a good spot to hold for the next couple of months. Remember, usually when you have both the Republican president, Republican Senate, and Republican House, the stock market is going to be up with about 13%. But now we're sort of down instead of being up. I personally think we're going to be okay. But technically, we're stuck between these two levels. It's not an easy trade. I think as long as trade above 19,117, I think maybe one could try to push this, trade this to the upside, and then let's see what happens here. The alternative, which might be the safest, is just to sell on a break here for this to go to the downside. Here's gold prices. So gold price has been the easy thing, right? So we have geopolitical tensions, we have resumption of the war, Israel, Gaza, and we have the Houthi militia now as well being under fire, and vice versa. And we have inflation, which is still a bit too high at 2.8% in the US. And then you have some things like stock markets being bearish. So this has been quite a straightforward thing. So when we discussed last week, we said, look, we're stuck in a triangle, and I said, if we can push above these two levels, we can go up. Alternatively, buy on a dip. So now you can see we just pushed to the upside and we reached that level. Now it's been very interesting. Around this level, I haven't had people calling me, I haven't had people saying, hey, look, should I buy gold? People are seeing it, but people are not necessarily long. That's the impression I get. So I think this can go up a bit more. Inflation adjusted, we still have sort of 15-22% to the upside. And in the short term, I would just be bullish between sort of 3,000 and 2,976. So literally look at the buy here, and then for this to go to the upside. The alternative would be if we have a very strong sell-off, maybe down to 2,955, but I think that's quite unlikely for now. How about Bitcoin? So Bitcoin, I like it a lot. I love trading it. I made some very good money at trading crypto. But unfortunately here is still a massive struggle. So we have, again, stocks maybe pushing up a little bit. Here, I'm looking for this to consolidate further and then have a breakout, because this is still being led by this downtrend, okay? So a downward trend line. So I think we probably need to trade sideways for a little bit, and then we'll see over the next couple of days. I wanted to create a lower high, maybe here at 90K, then reject it, and then maybe up to the upside. I think that's the easiest scenario. If not, I think we can push lower towards this level here, and then maybe down here where we have some very strong support starting at sort of 73K. And that is this week's market update. Do you have any questions for me? Then let me know. I'm gonna jump on the chat as well. Gonna go on Twitter first, gonna be on YouTube as well, of course. Okay, let me see here. There we go. Let me see here just a second. It's redirecting me to Twitter Studio. Good to see so many people here. Gold crazy move today. I wouldn't call it crazy unless something happened when I was away, I think what we're happening here with gold is just a normal reaction to sort of current situation. Yeah, so gold is a bit of profit taking, which I think is fully normal. I wouldn't worry too much about gold like that. It's just sort of trading in and out that is happening. And at one point, you know, as I showed you in the charts, it's just more about buying at one point. I think the gold is what you want to focus on anyway. Gold is sort of, where do we have strong trends? Gold, okay. And we have maybe some other, I think copper as well had an okay trend, but that's sort of what I would be focusing on. So this is inflation adjusted gold. So this is gold divided by US Consumer Price Index. And if you look here at this chart, the real all-time high is here at 11.93. So if we imagine that there's a very strong trend, then we have another 22% upside in gold. That's when we hit that old all-time high. So my expectations on US oil is the same expectations as I have for Brent. So we're stuck in that range, and I would look for either up or down on that. The ideas that we had, you know, peace and Ukraine and all that's being priced in, and that's why you know, the market now sort of doesn't have too much to work on. This is a weekly chart, by the way, so you can see it's sort of bounced off from these lows, but obviously if we push below it, you know, we can go down to 65 and 60. It all depends on Trump at the end. How can we control our emotions during live trade? So, good question. I remember when I started in the beginning. So many times when you are sort of new to the market, you are doubting yourself, and you're doubting that you made the right decision. You buy and then you be like, oh, I'm so stupid, I bought too late, I bought too early. And then the market goes against you, and then you start to doubt yourself, oh, where's my stop loss? Is it good or not? Most people don't even have that. And as well with the take profits. So the thing, what one needs to do is you need to figure out journaling, some sort of a system where you keep track of your trades, and you need to have a system pretty much. So you need to have an idea of where to enter, where to put a stop loss, where to put a take profit, and how much risk we're trading. The system you find is never going to be something that's going to give you, you know, everything right all the time. It's very, very difficult to do that. But you try to find that, so you journal, and then it's a matter of trusting your system, okay? Trusting the system. And the best thing you can do, again, you know, you have your system, so when you put the trade on, you put everything else on, okay? So you put you can use limit orders or stop orders, and then you put the stop loss and take profit. That's a good way. So actually having that in place, like, don't buy, especially if you're doing a challenge. You're doing a challenge and you invested some money in this, always have a system, know where to put all these levels. And then another thing is literally what's very good, you know, just, you know, get yourself a PlayStation or a Xbox, so you play that while your position is running, so you focus on something else. In terms of stress as well, stress reacts very well. Like, you get rid of your stress if you sleep well, watch comedy, go to the gym. So if you go to the gym, you sweat a bit for half an hour, whatever, that is really good with any type of stress, keeps you fit. So I think that's really important. And then, you know, it's not fun, but even if you have a system, sometimes you're going to be emotional. But as you use it more and more, you become more comfortable in your skin, and you can push forward after that. How can you start journaling? So journaling, I showed you last week. Journaling, just open a Word document. So open a Word document or a Google Doc, which is free, and then just print screen. So for example, you look at your website, or it's not your website, you look at your setup, and you're looking at the setup, and you say, okay, we have a double bottom in gold prices, and you know, per this, you know, we can drop down quite a bit on a break here. So you would literally be something like this. This is just an example, by the way. And you'd be like, I'm gonna sell here, and then you just take a print screen of this, which shows your entry, stop loss, take profit. And then when the trade has been completed, you take another print screen. And then what you do is when you have 30 of these, you can see before after 30 times. And then you can be like, okay, I'm entering too early, or I'm entering too late, or my stop loss is not a good spot. And then you can start to tweak your system. And then you trade another 30 trades, and then you can correct again until you find something that works okay. The thing is this though, this is really important. Your system is not gonna work every month of every year, okay? Especially if you're using a volatile system, like something that needs strong trends. If it's a range bound systems usually work very good in the summer months, sort of May, June, July, August, September. Then you have different type of trading in all the other months, which is much more stronger. So you need to understand, okay, when does my system work? When does it not work? And then after a while, you figure out what works really good for you. You're welcome. I'm struggling for a year. Please give some tips. So I struggled for many years as well. I struggled a lot, and I never give up. But okay, so this is an easy trick. Okay, it's much more easier to be profitable in the 4-hour and your daily chart than it is to be profitable in your 5-minute and your 30-minute. Okay, so if you work with bigger picture levels like a 4-hour chart, you look at support and resistance of 4-hour, or maybe 6 hours as well. You can change that with TradingView. That's usually a good start. And then if you struggle with that as well, you look at the daily. So the problem is, why do you want to trade short term? The benefit of trading short term is, of course, that in the short term, like if I load here if I load a 30-minute chart here in Euro USD, just to give you an idea, sort of we up, down, up, almost down. This is an extreme simplification, right? But you get the idea, right? 1 opportunity, 2, 3, okay? Or if you just trade with the trend, you get yourself 2 opportunities to the upside, okay? So you got 2 opportunities trading short term. But if you're trading the daily chart, so when did we last have a very good idea on the daily chart? Well, if you remember, we talked about this opportunity here in the daily chart. We said a break here is gonna take you upwards, which it did. So a really good opportunity on the daily chart. Last time we had that, it was in the beginning of the month. So when you trade bigger picture, you get less signal, but the qualities are better. And the trick to go around that, to fix that there is nothing happening, is that you would look at, you have a long list of different markets. I have a bunch of dog markets here that I follow, but I don't really trade. But look, I have literally everything under the sun. So just go to your capital account and look at everything they offer, and then list them. And then usually twice a week I will go through my list like this. These charts, by the way, are the charts that I use when I do these presentations. It's not the one I trade with. But here, for example, you see this is like a thing you would never look at usually, which is British pound against the Norwegian kroner. So you see you had a big pattern here that breached on the daily. So that's the trick. You literally go through everything until you find something that makes sense. How many pairs in my checklist? I have so many of them. I'm not sure, but I would say it's maybe 70. And when I trade crypto, I look at all of them, almost all of them. Is it beneficial to stick to one pair? Some people are doing it very good, okay? So some people, for example, stick with gold, and then they learn gold very well. The benefit of sticking with a pair, like something like gold, is that you learn the nature of gold. So when you learn it, you understand if it tends to give you false move, the breakouts and all this. So that is the classical school, is that. The problem with gold or doing that is that everybody thinks that gold is a fun thing to trade. Yeah, since February 27th of last year, it's been very easy to trade gold. But before that, gold was stuck in this huge range where if you tried to go into the short term, you surely would have lost money. So when you stick with just one asset class, you need to become an expert on ranging market, and you need to become an expert on trending markets. Okay, I decided that I'm just going to become an expert on trending markets. So I only trade markets when we are in this phase. I don't trade them when they're sideways. Okay. I have traded all those symbols. I've traded some really weird combinations. Well, not weird, but exotic combinations as well. Maybe not Thai baht, but I have traded Singapore dollar. I traded the Swedish kroner. I have not traded the Russian ruble. I have traded the Polish zloty. There's quite a few things there. Let's jump on YouTube. Hey everyone. Hey John, nice to see you again. Hey Vicky. There's a lot of names here and I'm very bad at pronouncing them. What do I think about the NASDAQ on the FOMC? So the NASDAQ 100 on the FOMC. So realistically, there's going to be some volatility, but realistically at the end, they're not going to say too much or do too much. I think they're just going to be very, very cautious about saying anything, because they don't want to upset Trump. That's the last thing they want to do. They don't want to lose their jobs. So what you're looking at here, I think, you know, buying at these levels stops here, and then for this to go up. That's what I think is going to happen next. But it's nothing I am trading myself, because this is not on its own. It's not good enough for me. The better options are, you know, consolidation. Like, I love rectangles, I love head and shoulders, and I love ascending and descending triangles. So those are 6 patterns, right? Those are the 6 patterns I trade. I don't really trade anything else. It is possible to trade more, but that comes back to some of the questions we answered in the beginning. How do you stay, you know, emotionally like calm during your trading? Well, I traded these patterns for so many years and I had success with them. So I know that even if I'm losing money for a while, if I'm using them, as long as I keep my losses small, which I usually do, then I'm gonna be fine. Like, I'm gonna be fine. And I'm not seeing that here right now. Today the sound is very clear, dude. Thank you so much. You know what's happening at the same time with the audio? I think the audio is too loud. I think it's burning. Like, the meter is telling me we're at maximum all the time, almost. But if you're happy, you're happy. That's good. So about FOMC days in general, like, if you don't see anything really interesting, then just lay low. Just lay low. I wouldn't bother. I think just look at the big picture. Like, what can be shaken up on FOMC? I think if they would say, oh, inflation is too high, maybe we need to raise, not that I think they're gonna do that, but if they would give a warning on that, yeah, maybe gold can sell off into support, either this first support level or the lower support level, maybe around 2,955. But around these levels, that is a really good opportunity to buy. So you can use the volatility as an opportunity to spike the price down so you can get involved. but realistically not much is going to happen. And if you're, so this is a mistake I've done many times before. Many times I'm holding a position, okay, and I have a profit on it, and then I say, oh, I'm gonna ignore the Fed, and then the position goes from being in profit to being back at entry, sometimes even stopped out. So it is usually a good idea to book profits. Yeah, the key lesson is lay low and wait for entry, unless you are really confident in what you're doing. Which pair do you trade most of the time? I would say that I trade most of the time for the last couple of for the last 1.5 years has been crypto. So it's not a particular pair, because what's happening with Bitcoin, when Bitcoin goes up, everything else goes up, and vice versa. There are, of course, some things that move more than others, or that are decoupled, but they're usually just decoupled for a short period of time. So I got a question, how long have I been trading for? So I started to trade in 2006, by the end of 2006, okay? So in November next year, it would have been 20 years of trading. 20 years with a live account. It took a long time for me. You know why it took a long time for me? It's because I was trading very short term. I was trading on the 30-minute. So on the 30-minute, I was trying to find the correct entries and exits. And I had two tight stop loss orders. So let me show you something. Let's load the ATR. This is the average true range. Let's flip it to a daily chart. And let's change it to Euro USD. So the ATR shows you the average difference between the high and low. In this case, it should be for, let me see how many days. 14 days, okay, so for the last 14 days. So for the last 14 days, the average range has been 54 pip, okay. So when I started, I had quite tight stop loss orders, like 30 pip. And let's look at it like this, look. So 30 divided by 80, it means that I have to be right. I need to buy in the right section, okay? I need to somehow manage to buy at the right spot. And okay, let's simplify it. If I have an 80 pip stop loss and I buy right now at any price level, forget about the FOMC, but if I just buy outright right now and I leave this open with an 80 pip stop loss, the probability that the position is going to be open next day is quite high. If I have twice the average range, so 160 pip, then it will very likely be open, okay? But if you do like I was doing, you have a 30 pip, 20 pip stop loss. Like if you have a 20 pip stop loss and the average range is 80, then there's a 75% probability that tomorrow you'll be stopped out. Does that make sense? So when you're new to the market, it's very difficult to find exactly the entries and the exits. So the number one trick here would be trade with the bigger time frames. That's what I would say. How do you deal with losing streaks? So losing streaks, what you do at a losing streak is you just take a break. So for example, imagine you start trading Monday, you lose, and then Tuesday you lose, and then Wednesday you lose. Then you take a break. You don't trade the next day. That helps you clear your mind. And then you observe what happened on Friday, okay, on Thursday, and then you go back on Friday. If you can still do the analysis on Thursday, so you do the analysis on Thursday, okay, and then on Thursday, if the analysis, so for example, you can place a demo trade, or you just write it down and remember. If whatever you said on Thursday actually played out, then maybe you can try again on Friday. On the other hand, if you did on Thursday still lost money, then you don't trade on Friday, then you come back. Because what's happening is that sometimes you have some very nice trends, okay? You have a very nice trend, Like here your USD is going down, and here as well we had the Trump winning, trade wars. So it was a very easy, you had a very nice reason to be short Euro USD, and you had the very nice technicals. And what happens sometimes is that you do very good here, and sometimes you don't do good when it's choppy like it is here. So what happens when you take a break is that you allow yourself to avoid this, unless this is what you're doing good, okay? So you need to understand and be like, okay, why? This is the benefit of journaling. You need to understand, why did I actually make money? If you made money here, you need to understand, okay, I made money because there was uncertainty in a trend shift. You don't need a strong story. But in my case, you know, why did we make, or why were we very successful here? Because we had that story, Trump and what he was gonna do. Thank you so much. Thank you so much. It says 20 years in trading. You look so young for that. I turned 40. Yeah, I turned 40. Yeah, 2 months ago. Yeah, thank you. How was trading back then? So trading back then is similar to what it is now, really. There's not a huge difference, except that now spreads are tighter. But the chart patterns, what you see now, are very similar to what you see, at least I think so. It's very similar to what you see today. So it's not a huge difference. And that's the cool thing with technical analysis. Like, the patterns you see are very similar. Thank you, you're welcome. Okay, so we're starting to get some questions we already answered. So we're gonna wrap things up. I want to thank everyone for joining me, and I hope you have a happy trading and successful trading. Journaling, do some sports, keep track of things. The journaling thing is very important in everything you do. It tells you if you're going in the right direction, especially with something like this. And learn more. Come back next week, learn from me, learn from others, and just keep on pushing, and it's gonna be good. All right, thanks so much, and I hope to see you next week.